A beginner's guide to investing in the stock market. Ever wondered how people grow their wealth through the stock market? Is investing just for the rich, or can anyone get started? Well, in today's video, we're breaking down everything you need to know to start investing as a beginner. Make sure to hit that like button, subscribe, and turn on notifications for more finance or content. Chapter 1. What is the stock market? Think of the stock market like a big auction house. Instead of bidding on antiques or artwork, people are buying and selling shares of companies. These shares represent a small ownership in a business. Memo: key points on screen. 1. Stocks equals ownership in a company. 2. Investors buy/sell shares based on perceived value. 3. Prices change due to supply and demand. When companies perform well, their stock prices rise. When they struggle, stock prices fall. Your goal as an investor? Buy low, sell high. Chapter 2. Why should you invest? Leaving money in a savings account earns 1 to 2% interest per year, but the stock market? Historically, it has returned 7 to 10% per year on average. Memo: on-screen comparison. 1. Savings account, 1 to 2% return. 2. Stock market, 7 to 10% return. That means $1,000 invested in the market today could be worth over $8,000 to $10,000 in 30 years. That's the power of compounding. As the legendary investor Warren Buffett says, the stock market is a device for transferring money from the impatient to the patient. Chapter 3. How to get started with investing. Alright, let's break it down into simple steps so you can start investing today. Push pin. Step 1. Open a brokerage account. You need a brokerage account to buy stocks. Popular ones include Fidelity, TD Ameritrade, Robinhood, and Vanguard. Look for one with low fees and good customer support. Push pin. Step 2. Set your investment goals. Are you investing for retirement, passive income, or financial freedom? Your goal determines how aggressively you should invest. Push pin. Step 3. Decide what to invest in. You have 3 main options. White check mark, individual stocks, high risk, high reward. White check mark, ETFs and index funds, lower risk, long-term growth. White check mark, dividend stocks, steady income from big companies. If you're just starting out, ETFs like the S&P 500 index fund are a safe bet. They spread your money across 500 of the biggest US companies. Step 4. Start small and invest consistently. You don't need thousands to get started. Even $10, $50, or $100 per month can build wealth over time. The key is consistency. The more you invest, the more you benefit from compounding. Chapter 4. Common investing mistakes to avoid. Before you dive in, let's go over some mistakes beginners make so you can avoid them. Police light. Mistake 1. Trying to time the market. Buying at the perfect low point and selling at the highest peak? Almost impossible. Instead, focus on long-term investing. Police light. Mistake 2. Investing without research. Always research a company's financials, competitors, and long-term potential before investing. Police light. Mistake 3. Letting emotions control decisions. Stock prices fluctuate daily. Don't panic sell when the market dips. Instead, think long-term. Chapter 5. How to grow as an investor. to become a better investor, keep learning. Here are some great resources. Books. White Check Mark, The Intelligent Investor, Benjamin Graham. White Check Mark, Common Sense Investing, John Bogle. White Check Mark, One Up on Wall Street, Peter Lynch. And of course, subscribe to Finance Aura for more investing tips. So there you have it. A complete beginner's guide to investing in the stock market. What's your biggest investing question? Let me know in the comments below.